let's get a fundamental view on the equity market. We've got Sandip Sabharwal, who's CEO for the Portfolio Management Services business at Prabhudas Liladher, joining us on the show. Sandip, to begin with, now that we are seeing the markets climb, would you say that the recent lows that we saw are behind us, that we could possibly be headed towards maybe the 17,000 mark?
I think I would put the markets in two scenarios. The first scenario is that that Greece actually stays within Eurozone, and if that is actually the case, then I think we have seen the bottom for the market, and the December bottom should not be seen again going forward. The second scenario is that Greece actually exits and it leads to some messy issues, the repercussions of which are not known to anyone, howsoever an expert that person might be. And in that case, we could see a short-term sell-off in the markets. So I think in the very short term, given the fact that markets are heavily oversold, and also the fact that the rupee is looking heavily overbought and to that extent looking to appreciate in the short run, I would say that in the very short run there's a very strong possibility that we could get back to the 16,900, 17,000 levels for the Sensex. However, whether that will sustain or will not sustain will clearly depend on global factors rather than any domestic factor.
Sure, that's the word coming in. But what about the rate-sensitive sector, Sandeep? Because you are seeing quite a bit of strength in today's session. Are there any particular stocks or sectors that you'd be watching out for?
Yeah, I think clearly my view has been that the markets, as they rally, will be led by private sector financial institutions largely. And I think the day on which SBI came out with results and they beat expectations significantly and NPAs seem to be well under control, at that time my view was that I think this could be a short-term bottom, and that's what we are seeing. So I think private sector, banks and a very few public sector ones look pretty attractive, and I think that sector should lead the rally. And eventually what's also going to happen is that the sharp rupee depreciation also brings about benefits of terms of trade to a large number of manufacturers. So I think the key will be to identify the sectors which benefit out of that, where the input cost could largely be domestic, but either they are import substitutes or they are big exporters, and to that extent those companies will clearly benefit over the next 2 to 4 quarters. And those sectors could be the ones where one could take a bet, because valuations seem to be pretty attractive at this point of time.
How are you viewing the capital goods space, Sandeep? Do you believe that some of those counters have been beaten down fairly severely, so there may be opportunity in buying into them, or would you still stay away from many of those counters? In the capital goods and infrastructure sector, I would put the companies into two categories. On one side are companies which are heavily indebted, which have got various project issues, environmental clearance issues, or which have got projects which are stuck for one reason or the other. So I think one should clearly stay away from them irrespective of valuations. But on the other hand, there are companies which are clearly not facing these issues but are still cheap. So I think a market leader which we hold in our portfolio, Larsen & Toubro, I think that's clearly we believe clearly will be an outperformer going forward, because a lot of companies which bid for projects at very aggressive rates will be out of the market going forward, and L&T is a clear beneficiary. It's given a strong projection of growth even in this year despite the weak macros, and to that extent I think that's one stock to bet on. Similarly, on the infrastructure side, one has to look at companies which have got relatively strong balance sheets, which are not stretched in terms of cash flows. The auto space and the fact that many of the car manufacturers have actually had a field day, especially those selling diesel cars. Should a duty hike come, how would you be viewing it?
I think a duty hike could be counterproductive, because as it is, duties have got increased substantially both in the union budget and as well as if you look at various state budgets. So various state governments have taken action on diesel vehicles of their own. So to that extent, I think given the fact that as it is there is a slowdown happening, and I think the Finance Ministry has not taken this call in the budget, and I don't think that this call is going to happen. On the other hand, I think if they actually go ahead with a diesel price hike, actually it will be positive, because eventually it will have a very positive impact on the rupee. So rupee should appreciate. And my view is that if they actually go ahead with a diesel and LPG price hike, we could see a 1.5 to 2 rupee appreciation in the rupee.
which sets off a virtuous cycle which could actually lead to petrol price cuts going forward. I think that's the call the government has to take, whether we remain in a vicious cycle or whether we have to start a cycle which benefits the economy overall and eventually has an impact on petrol prices.